at times short-term pain is necessary for long-term gain or long-term growth. And any decision that Japan makes regarding the yen is going to be highly politicized and criticized. When the Bank of Japan started raising interest rates, it rattled markets all over the world. People were getting rid of yen funded carry trades, and it was an eventful week to say the least. So let's deep dive into it. Now, before we get started, let me just say that if you'd like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The Bank of Japan is doing what it needs to in order to calm markets. And the central bank is in a tough situation, really, because while it does want to strengthen the yen, it does not want to strengthen it too much. And after last week's drama, it might want to just kind of sit on the sideline for a little while and just wait things out. And the Bank of Japan has come out and said that they will not make any rash decisions moving forward in order to not rattle markets again. But with Japan being export reliant, a yen that is too strong is not good for the economy, and they don't want it to go up too much. Now, in recent years, this has not been a problem at all, as the yen has been very weak, and this has led to a lot of people doing carry trades, people borrowing in the yen and converting it or selling it into higher yielding assets. The yen was kind of a money maker for a while it was cheap, but for the Bank of Japan, it's kind of like a double-edged sword. For exports, a yen that's not too strong is good, but you are also import reliant for certain things, and you don't want your yen to be too weak either, as that affects your consumer base. So again, Japan in a tough situation, and when they just went ahead and raised interest rates in an attempt to try to strengthen the yen again, not too much but just enough so that it's stable and not continuing to be in a free fall. You saw a lot of people just unwinding carry trades, selling them left and right, and this had a huge market effect. Now, things have sort of settled down, and Japan's stock market has rebounded nicely from that big sell-off, but where do we head from here? And any decision that Japan makes regarding the yen is going to be highly politicized and criticized. The thing is, the country is export reliant, and you do not want your yen to be too strong. But Japan imports the majority of their oil, and it's not just oil that they import food and other goods that the consumer base, the people at home, rely on. And if the yen is too weak, I always go back to that balancing scale. When you have a balancing scale, you don't want to be too far to the left or too far to the right. You don't want your yen to be overly, while that might help the country, with their exports, you're going to hurt your consumer base at home. And if they're feeling a pinch and they're spending less, you're going to hurt your economy that way. But if you strengthen it too much, and then the exports, and you're not as competitive, and you're hurting your economy and your country that way, that's why that balancing scale is the perfect example. You just want to be in the right place. And I know that's easier said than done. Always do things the right way, but you will have to make some tough decisions. Japan is going to have to play with the yen at times and do different things and play with their rates. They're not going to be able to keep them where they are right now. They're going to have to move them eventually. And that's going to come with a lot of criticism, especially after what they did, what happened to their stock market and what it did to the rest of the world. Everybody's going to keep an eye on it. Now, I don't think that Japan is going to be raising rates or playing with rates anytime soon. They just did what they did. It strengthened the yen a little bit, and obviously it caused a whole bunch of turmoil. I think Japan is going to just sit right here for a little while and hope that as the United States moves rates, that it kind of benefits them while they don't have to do anything. But there still are a whole bunch of carry trades out there, and people still do borrow in the yen, not just against the U.S. or to get assets in the U.S. They do it for Australia and other countries as well, because it was a money maker for so long. But Japan is in this weird situation right now with all the debt out there, public debt, corporate debt, and all this stuff that's going on. And I don't think that they're going to be moving anytime soon. The moves that they have made headlines. They've shook things up a little bit, and I think they're going to sit here for a little while. Now, Japan is pausing for the meantime, but they do understand at some point tough decisions are going to have to be made. Interest rate policy is going to have to be implemented, and how that affects the stock market. And what you have to understand is at times, short-term pain is necessary for long-term gain or long-term growth. And the next decision that they make, whether it's months down the line or whenever it is, it might have a shock on markets again. Might not be this big, might be bigger, we don't really know, but at some point they're going to have to make another move. And even though it might be painful, it might be best for the stability of their country long term. But the central bank has also made it clear that they are going to move very cautiously moving forward. They're going to try to not do anything to rattle markets like it just happened recently. And all eyes are going to be on whatever policy decisions they implement moving forward. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.